Welcome to Legerity's Finance Transformation webinar, The Importance of a Data-Driven Finance Systems Architecture. This webinar is being recorded, so please get in touch afterwards if you'd like a copy of the recording or the slides, and do please share with any colleagues who are unable to attend today. We're using the GoToWebinar system today, which allows you to ask questions on the right-hand side, and we'll do our best to answer any questions towards the end of the webinar. So now, allow me to hand over to Legerity CEO, Jeremy Wood.
Well, thank you, Mike, and welcome everyone, whether you're joining us live or on the online recording, to our webinar today, where we're going to be looking at the importance of a data-driven finance systems architecture and how that can assist organizations and finance departments. We've got a lot to cover in the agenda over the next 40 minutes or so. We'll start off with a few introductions for those who haven't met with Legerity before. And then we'll start to look at some of the overall market drivers, why finance systems architectures are increasingly important to support modern business. We'll look at what that means from a systems and a data perspective in terms of what a future state finance architecture and data ecosystem looks like and how we get to that from where we are today. We'll look at some of the challenges that business users have with current systems architecture, and how a modern system architecture can deliver a single version of the truth around data, and how our no-code accounting rules platform can assist in achieving that. So a lot to cover. I'm joined today by two of my colleagues, so subject matter experts. As a team at Legerity, we've been involved with accounting change, finance transformation for many, many years, looking at different accounting standards and more transformational projects. The majority of the team here come from an accounting background themselves, having qualified largely with Big Four and being a combination of both practitioners using technology and also helping clients to implement. So can see it from various different aspects, and we're very pleased that Mark and Atanas join us for the discussion today. Good. Well, as Mike said, if you do have any questions, please enter them online in the portal. I think it should be on the right-hand side of your screen, and we'll save 5 or 10 minutes at the end for answering any of those questions that come through. So firstly, a quick introduction to us at Legerity, in case you haven't come across us before. We have a cloud-native accounting rules platform that will become a bit clearer in terms of how that helps firms to implement improved finance processes and get control around your finance data in a moment as we walk through the slides and the presentation. It's a very modern product in terms of leveraging cloud native technology, all open source, and can process both in real time and batch, so massively scalable. And as a firm, we help clients solve complex accounting problems and finance change, be that driven from digital transformation or other accounting standards. And the platform itself can be applied for multiple use cases, depending on what your specific drivers are. And again, we'll elaborate on that in 2 or 3 slides' time. We work with firms across the globe. I think we're active in around 35 different countries currently, and ranging from some of the largest firms in financial services and insurance across the globe through to some of the medium and smaller enterprises. It's a very scalable platform, and we have solutions for all types of clients. The technology itself is award-winning. We're well recognized in the market for a number of different use cases, and recently we're seen as included in the RiskTech 100 as one of the rising stars. That's looking at the top 100 sort of risk tech vendors across the globe. Good. So that sort of gives you an introduction to who we are at Legerity, and as we mentioned just a moment ago, we help our clients in a number of different areas. And we sort of see it in sort of 3 pillars from a market driver perspective. So the common theme across all these pillars of activity and market drivers is that finance is under pressure. Finance is definitely under pressure from the front office in terms of clients requiring more complex and differentiated products and digitized products. But finance suffers because they've had a historic underinvestment in finance systems. So that means that systems are creaking, processes are inefficient, error prone, lots of manual workarounds, all those type of things. So what we're seeing in the market generally is that forward-looking CFOs are driving change, and certainly over the next, between 2 to 5 years, we're seeing, significant activity around finance change, transformation, driven by any one of these individual business drivers, and they're not mutually exclusive. Often programs can start from a regulatory perspective, but also start to address more transformative benefits within the organization. So as I say, we look at things from a transformation, regulation, and automation. Give you some sort of examples of those. From a transformation perspective, this is supporting business change, innovation. You may be in a sector that's under competition from new entrants that are sort of have greenfield sites from a technology perspective and may be pretty agile already. So firms, more established firms, are having to improve, everything from the front office through to the back office, and finance needs to be equipped and ready with very agile systems, agile technology. From a regulatory perspective, we've had a whole range of new accounting standards. IFRS 9, 15, 16, 17 have come through, and we're helping clients meet those. Newer things such as ESG reporting, carbon accounting, emissions, again, that will crystallize in terms of new regulation that firms have to meet, and also ongoing business as usual controls around Sarbanes-Oxley, which is 20 years old this year, but increased focus around audit control and data. And then finally, the automation aspects is really making things more efficient. I think over the last 2 years, we've seen the benefits of the cloud come through, remote working, supporting, scalability through the use of new technology and automating and streamlining processes. So any of those drivers can, be really, really, really important. And as I say, we provide an accounting rules platform. The accounting rules platform has a number of components. It's very modular. Fits into an existing architecture in a very non-disruptive manner. But the key element of that is really looking at the data process from the front office, core systems through ultimately to finance, but looking at it from an event-driven perspective. So what we're really interested in this modern architecture is to look at the business events and transactions themselves, and then using a platform like Fastpost to establish financial control and accounting validation very early on in the data journey, well in advance of the traditional general ledger and ERP. And by doing that, that drives out, a lot of business benefits, which we'll start to cover in a couple of slides' time. So the modules themselves, Data Manager, that looks at it from a data integration perspective, dealing with heterogeneous different types of data formats, different source systems, but getting that to a common form, concept of data pipelines, supporting various different forms of validation, enrichment, transformation, but very much reaching a sort of standardized view from a finance perspective as early on in the data journey as possible. The calculation engine is a very powerful engine, doing pre-processing before we apply the debits and credits. So what we often find in a legacy systems architecture is that some of those processes, maybe around aggregation, amortization, grouping, discounting, you know, they're sort of lodged in these upstream systems built many years ago and maybe not fit for purpose. So what happens then is these processes sort of get built off system and bring in consistency and sort of uncontrolled from a sort of audit and finance perspective. So standardization of calculations, then applying the debits and credits in terms of the accounting rules. Really interesting use from a sort of a no-code perspective that Atanas will demonstrate this afternoon, how users can really get control of the accounting rules and some of the calculations, and then ultimately creating an accounting view that can reside within your ERP, or if you are using a subledger, in subledger technology at a very sort of granular business segmented manner. All very dynamic, cloud native, visual, you know, all the things you'd expect from modern systems, bringing in low code and no code concepts to bring user ownership. So very modular system, and we'll give you some examples of that, all sitting on the cloud. That's all we do, which cloud native, but built on a very modern tech stack that includes a very high performance architecture where we're using in-memory data grid for both real-time processing, low latency, as well as batch as well. Based on open source technology, driving lower cost of ownership, and from an integration perspective, making sure that we have very open interfaces, we can deal with multiple different sources of data and provide that to different targets. Good, so that's sort of an introduction. And as I say, we make the platform available to solve multiple use cases. Today, we're going to be talking about finance systems and data architectures. We call that You Make the Rules, elaborating on the low code, no code perspective. But the platform equally supports other types of use cases. We've been very active in IFRS accounting change, so IFRS 9, 15, 16, and more recently 17. It can be used for full finance transformation, so to complement your current general ledger, be it legacy or modern, and also an area that we started to work on at the end of last year in terms of ESG reporting, looking at emissions and carbon accounting as well. So the complexity and look of ESG and looking at it from an accounting standard and the role of finance. But today we're going to be talking very much about You Make the Rules and how a modern finance systems architecture can start to really support agility in the back office. So this diagram is really a bit of a caricature of what a finance systems architecture may look like from a legacy perspective. You know, architectures are largely based on silos data, hard-coded interfaces, multiple staging areas, and off-system workarounds, all running on legacy technology. So very much sort of point-to-point interfaces. You know, we've been working in these sectors, financial services, insurance, over the years. And, you know, it always surprises us that, you know, this continues to be largely the case in organizations, that just for, you know, reasons, whether it's through acquisition or legacy systems, you know, there's a lot of sort of legacy inter-application spaghetti, as we call it, supporting, you know, the back office from a finance perspective. And that makes things, you know, difficult from finance in terms of inefficient processes, difficult to change, expensive to maintain, and ultimately you get inconsistent accounting outputs, meaning that finance spends a lot of its time, you know, working out what the problems are and not really adding value to the overall, you know, process, looking at data very much from a sort of, you know, working out where those issues are, solving those, and then limiting the time it can look at it from an analytics perspective. What does that look like in sort of real life? Well, this is a sanitized version of a finance systems integration layer from one of the big retail banks that we worked with a few years ago. And it's a multiple set of staging areas, downloads, mapping tools, various different things, largely built on legacy technology. In their instance, they had tens of thousands of COBOL rules, supported by a team of 6 FTEs. And importantly, in a modern world where things can change quite quickly, both from a business perspective or a reporting perspective, taking multiple weeks to change. So the default was, if you go to IT and ask them to change anything, 12 weeks is a sort of minimum, all running on legacy architecture. So massively expensive to maintain and make any changes. So obviously you don't go from that to a completely modern architecture in day one. So what we tend to do is work with clients to on a phased implementation approach, where we can start to look at individual lines of business or priority areas. And by introducing an accounting rules platform, we can start to get control of our data, our calculations, and ultimately the accounting outputs in a more structured manner. So definitely a phased approach, and that starts to drive out the accuracy in accounting, the consistency. And then when things do start to change going forward, you have this modern platform that allows you to look at your data and make the changes as necessary to support accounting. And then if we look at that from a ultimate target in terms of where our clients ultimately want to go, it's very much looking at a modern finance and data ecosystem, largely cloud-based, using technologies like Snowflake, maybe as a data cloud, on AWS. But to have a consistent view of the data, a data lake, whereby the accounting rules platform and calculation engine is sort of an integral part. So as we said right at the start, getting control of data very early on in that data journey, and by the time we post the accounting through to the GL and ERP, it's very accurate, it's very consistent, and then we can free up time in finance, not just from problem solving, but to really start to add value to the overall data, which is exactly where what businesses are looking for today. So anyway, high level sort of discussion, but it starts to paint the picture in terms of, how do you get from a legacy environment, inflexible, to something that's a lot more supportive and adaptable and agile to support modern businesses. So Mark's now going to sort of drill down on this. So we'll go to the next couple of slides where we'll start to examine that from a user's perspective.
Great. Yeah, thanks, Jeremy. Hi, everyone. So let's have a think about some of the day-to-day user challenges that exist in these sort of finance processes. So, audit trail is a massive one. So tracing data, the data lineage, transparency of the information, thinking about the control framework, how are you able to enact, things like segregation of duties. So audit and control is a big challenge in these fragmented manual architectures. Validating data when you're passing it from one aspect, one area to another area. Classification of data is a major task that users are faced with, including transformation. So transformation, especially from raw data into something meaningful from an accounting perspective. Obviously, when point-to-point type solutions are built, then managing changes is very difficult. And if there are manual elements, then that's a major frustration for users who would often want to automate processes to give them more time to work on value-add activities. So in terms of what a lot of these finance users will actually be doing, is performing things like allocations, so allocating data at different levels of granularity, perhaps preparing amortization schedules, aggregating data up into different hierarchies, matching of data from different systems. So often data needs to be brought together from different places, and they may not have the same attributes, so matching can be very tricky. And applying patterns to data, so similar to amortization, but perhaps there may be some more complex rules around that. And then in general, within finance, there are just a lot of logical algorithms that need to be put into place to transform raw data into accounting information. Obviously, in any finance process, there's often adjustments, data availability and things like that aren't always on a timely basis. So people in finance spend a lot of time adjusting. They need to be very, any rules that are put in place need to be flexible to adapt to, changes in the business. A lot of the accounting logic can be variable or contingent on different things. So it's not always debit this, credit that. Often the rules are a bit more complex and they rely on sort of multiple steps potentially, or looking at other reference information or balances, for example. And there's just a lot of logic to maintain. So you're dealing with an awful amount of logic to create the accounting view, and that has to be maintained and validated constantly. And then thinking about the outputs, there are hierarchies across the data, particularly we're thinking about consolidated results or multiple entity situation, multi-dimensions for the data, so products, branches, regions, things like that. All of these things are very dynamic, so more, the products are evolving, the business structures can be changing, different management, so it's a very dynamic, changing environment. All of the information from different perspectives at different levels needs to be reconciled. And of course, you want to have very granular information because, if you have a point number delivered to, say, the executive or investors, then it's useless unless you can explain that. So you need granularity. So those are the kind of challenges that we see our finance users having. And if we look at the FastPost architecture from a slightly different angle, we can see how the components kind of meet those needs. So we have audit and control in the DNA of FastPost, so that wraps around everything we do end to end. And then we have a tool which we call the data manager. And the data manager is a very flexible tool for bringing data into the system. And it can perform a lot of transformations, and in particular, the organization of the data into the accounting view. So that's not necessarily a full ETL process, but what we can implement is those logical rules to organize the data into the accounting perspective. And as part of that, we can perform a lot of validations, and business users can define their own validations. We have a very powerful calculation engine, so for things like amortizing, or the allocation engine, disaggregating data, preparing, say, earning patterns, or matching information. So we have a lot of pre-canned rules within the application, particularly for financial services companies, but also you can define and set up your own. Then within the accounting rules, very complex and rich accounting rules engine within FastPost, we have templates that can be set up for all the debits and credits. They can be across GAAP, so if you have different entities in different jurisdictions, say for example US GAAP, and you can account on a multi-GAAP basis within templates, or you can set up different GAAP templates. Within all of our accounting rules, we can set up no-code expressions. We call it Legerity expression language, and this allows you to build up quite complex multi-step rules, including contingent rules, so post this in that circumstance, post that in the other circumstance, or based on this balance, etc. So it's quite comprehensive and fully user-controlled, fully transparent, visible to the users for implementing complex rules. And then finally, all of that rich data is processed in memory for high-speed performance, but it's written to our data layer and held there with all of those detailed attributes and segments and hierarchies that you would require. So if we just go to the next slide. So, our platform is very flexible. We handle a number of use cases, but we do have an extensible banking data model built in end-to-end across the application. This is really well structured. It's usable. It goes from the ETL side all the way through to the rules and the calculations and the accounting rules, and then the structures in the reporting data layer. So that comes out of the box. It's very well tested. It covers full range of products and services that you expect in financial services and banking. But the important thing is it's very extensible. So, you know, we obviously cover most of the major product lines, but if there are new things, then they're easily added during implementation, but also for users post go live to manage changes in the business. And we also have something called JSON attribution, which means we can bring in lots of additional data items without flexing the data model. So the data model is pre-built, but you can extend it, add new information, say for regulatory reporting, without updating the data model. And this is really valuable for finance users who are managing a dynamic situation, that you have something to work with straight away, but you can be confident it can adapt to all business changes, regulatory changes, etc. And then finally, on my section, before we move to the demo with the Tanis, is you know, what you end up with is a very granular single version of the truth. So we have all the accounting details across the transactions, across all the entities, the different companies, potentially at multi-GAAP departments. The ledger can handle budget, forecast, scenario information, also non-financial information when we're thinking about ESG and reporting frameworks like that, full multi-currency capability, calendars aligned to your reporting frequency, and all the hierarchies to support consolidation process. And then we have up to 20, if we call them business segments in the ledger, so you can cut your data across all of the product lines, regions, all these areas that you need to, plus all that extensible JSON attribution that we can bring in to facilitate detailed regulatory reporting. And all of that with a full audit trail, end-to-end data lineage, and wrapped around with that enterprise IT security that you would want to see, that probably you don't see in things like spreadsheets and mini user databases. And with that, I think I'll hand over to Atanas, who's going to take us through a short demo of FastPost.
Well, thank you, Mark, and we'll now hand over to Atanas. So, Atanas, if you'd like to share your screen, and we'll move to a demonstration of the platform. And over to you, Atanas.
Thank you very much, Jeremy. I trust you can hear me and see my screen at this stage.
Yes, that looks great.
Thank you very much. Okay, so hi everyone, and a big thanks to Jeremy and Mark taking us through these first slides. So let's bring this all to life. What does this all mean, and how do we actually, help our clients, move through this transformation journey? Jeremy touched on this earlier, but really importantly, how do you sort of meet the expectations of clients that are expecting digital now, fast, on demand, and also meeting that with the creaking sort of mainframe, archaic code written sort of business language in banking. Just to set the scene, one of our clients came to us with exactly that problem, having thousands of lines of code written in a language that's not supported anymore. And they really wanted to bring these rules to the forefront of the finance team, understanding that the ownership ultimately resides with the finance users. They wanted to make it really, really transparent, accessible, but still in an auditable and controlled system. So they came to us and said, please help. We have these contracts and we want you to show us how you would do it in FastPost. So today I'm going to on the next slide for one of these use cases, and I'm just going to introduce that. So it's a funds transfer pricing contract. Now this is a back-to-back contract that's created between a loan unit and the Treasury Department within one of these banks, and it sort of originates with the customer requesting a loan facility of 3 million. Going to the loan unit, and then the loan unit actually going to the Treasury and requesting for this deposit contract, which is then created. Off the back of that contract, there's a loan contract created between Treasury and the loan unit, which then creates that back-to-back contract that we spoke about. Now, there's a drawdown at a point in time, and there's also a funds transfer price that is calculated upstream. And what we were asked to do finally is to calculate the interest rate off the back of this transaction, post it, and for us to deliver the results at the most granular level of journal line posting to the client's GL. So what does this look like in FastPost? Let me take you through the three main steps. So the way we would do this is we would take the data, the client data, we would transform it using our open API technology to the standard data set that is required. And we would also select the correct interest rate curve, dependent on, of course, the currency and the time that the contract was initiated. The second step really is where the accounting rules engine comes to the forefront, where we start to calculate the funds transfer pricing amount to be posted. We look at the map and map the cost center specific logic. We associate the accounting rules and the accounting codes to this specific entry. And last but not least, we create and post these funds transfer pricing journals, as well as create the movements that we will see in a little bit in our trial balance. So let me switch over to this the accounting rules platform. Okay, so first and foremost, what I want to do is I want to show you all the contracts that we have loaded as part of this demo. So I'm just going to go to my contract screen and I'm going to select my contracts. And if I hit search, this will show us the full list of contracts that we have available. Now, there are a number of different types of contracts, including loans, deposits, interest rate swaps. We have different types of loans, including different currency transactions coming in, where the FX translation and revaluation functionality kicks in. We're able to report across multiple currencies. And that really provides that flexibility that Mark and Jeremy mentioned earlier. Now, let's focus on this funds transfer pricing contract we started off with. So I'm just going to filter on that. And we can see here, there are a number of items that pop up in terms of the specific contract. So the loan principal amount we mentioned of 3 million. We know who the customer is. We know at what time this contract was incepted. And there's some reference data that comes in from other various sources. So in this case, we've been given the interest rate of 15%. We've been given the funds transfer price as well. Now, there are instances where we have to calculate and we have to reference other data externally. So in this case, we've been given the interest rate. Other clients have said, can you actually feed in external data from, for example, interest rate curves from external sources? And the answer is yes. And let me show you how we do that. So we've connected the data. And for the purposes of the demo, I'll just go to the reference screen here. I'll go to the yield curves. Let me just open that up in a new tab. And what we can see here is we've loaded two different curves just for the purposes of this, this presentation. They're both from the Reuters source. Of course, we can ingest from multiple sources, including Bank of England, Reuters, and any other data feed, and across different currencies as well. Obviously across different dates and different points in time. So we can easily reference curves in calculations that needs to be, that have the effect of the interest rate amount. So let me close that and let's refocus on this contract. So what I'm going to show you over the next few minutes is the underlying journals that have been created off the back of this this contract. We're going to dive deep into some of the details of those journals, including the various events that have driven the journal postings, and then I'm going to focus on one specific event and play back, you know, the how easy it is to view and to edit and to create these changes that reside within the finance users sort of controls and really the functionality is at the finance users hands. So let me go into the journals next. So I'm going to go into my ledger and I'm going to click on the journals inquiry screen up here. And again, if I hit the search button, you will see that below we can see the full list of journals at the most detailed granular level. And what we can also see is that we want to then focus on one of these contracts that we are interested in. So in here, I've already searched for this, so it's saved in the memory of the funds transfer price. On the right-hand side, I just want to draw your attention to what Mark mentioned earlier in terms of our segments. So we've created a number of data attributes or segments by which we can slice and dice this data. It's available for a finance user to interrogate and to view data from a different lens. So I'm going to click on my business department segment value, and to switch that on. And the reason why I'm doing that is that I want to see all the journals that are impacting each of my business departments. So I'm going to just filter on effective date so we can do the very quick walk of the journals together. Starting off with the principal amount on the 15th of July of 3 million, we can start to see the drawdown and the impact of the transactions in the journals of this drawdown event. We can see which business department is getting impacted. So this is written to both the lending, and we can see group treasuries also impacted by the loan principal amount that's being drawn down on. And further below, we can start to see some of the other journals, which are around the accrued interest and the interest expense and interest received amounts getting calculated here. And this is what I want for us to focus on today. So these are calculated fields. And let's say, for example, that the head of accounting and accounting practice in our entity comes and says to us that we need to change our rules. So we need to change the way that we calculate our interest rate. That's dependent for our entity, so we need to create that change. So that's been signed off. Now, as a power user, today I'm logged in as an administrator. I can go in and affect that change, and I'll show you how to do that. In the real world scenario, this would be under the right controls, the 4I principles. We would assign the correct user controls and rights for people that can change rules, people that have to approve the rules, and we would set specific dates that are either locked or open, where those rules can be affected and can actually start to take can be impacted in the FastPost platform and it will be calculating the transactions going forward. So for purposes today, I will show you how to do that as a Power Finance user. So let's look at this specific journal, for example, the realized interest expense. So if I want to drill down on this specific journal, understand what is the event that has driven that, I will just simply click on the hyperlink of this journal. And what this shows us is the effective drill down or the detail behind that journal, or which event in fact has driven this journal entry. So what we start to see is, again, the principal amount on which we calculate the interest rate, and we calculate the interest posting. We know the accrued interest amount. We also know the funding rate. We also know the term on which the interest is being calculated. And then we have the reference data, as we saw before, in terms of the interest rate of 15% and the funds transfer price of 0.28. So if I click on the plus, you'll see a lot of the other reference data that we've been able to bring in, and that is viewable and actionable, of course, by the finance user. In this case, what we're interested in is to see what event has driven this, and we can see here under the business event code, it's the bank interest event. So again, just wanting to know what we're doing here is that we're going to go and look at this rule that's driving this journal entry, and we want to go and amend that. So how we do that is we go into our accounting rule templates. So I'm just going to click on that. And the accounting rule templates is really where we set up and we hold all those accounting rules that Mark spoke to us earlier, in the way that we drive the accounting, the principles, and we lay out the foundation of how and where these journal postings happen. So this is my full list of accounting rules. And again, I want to filter on this one specific bank interest event that we are focusing on today. Under the sub-event is where we've set up our different types of contracts or instruments. In this case, we're going to focus on the loan, and let's hit on search. And then you'll see the list is now filtered across the bank interest event, which we can see here in the second column, and also on the loan type of contract. I can further drill down on the interest accrual sub-event. So if I click on search, that will show me the journal postings that impact my realized and interest paid and interest received. So for purpose of the session, let's go in and see how the finance user can go in and change and edit this rule. So we spoke earlier about the no-code and low-code expression language. Both Mark and Jeremy mentioned that. So let me show you how that works in practice. So if I click the edit button, I can go and affect a lot of change right away in terms of selecting which accounting practice this rule is applied to. So as Mark said, we can transfer this from US GAAP to apply to my IFRS or any other accounting principle, or post it in a specific ledger. So in this case, we've set up a digital primary ledger for this one client. If we turn our attention to then the input expression language, so you'll see here that it's very familiar language. It's something that most finance users would be able to access and write in the formula editor of a tool such as Microsoft Excel. Of course, in this case, what we've done is we've said, well, you own the rules really means that any finance user, without being skilled in C++ or Java, can go in and start to affect change and really own the rules. So in this case, I want to go in and affect the change myself. So let's go and edit the rule. So in this case, we can see it's actually just looking at the funding cost and either posting a positive or a negative value of the funding cost if it's not a zero amount. So in this case, I actually want to call the funding rate. So I'm going to say if funding rate equals 0, then yes, post a 0. However, call the funding rate amount, multiply that by the principal amount of the loan, as we've seen, and then multiply that by the full term. And because it's a daily interest rate, I need to divide it by 365. And close my parentheses, and this rule is ready to go and implemented. Now, as I said, in the live environment, this would be controlled. If I click on Save Changes right away, I've taken off the control function, so we can see that rule being written straight away here. If it was in the real life scenario, I would have someone that's checking, validating the rule, and making sure it's applied at the right time, not affecting any finance close processes. So I really hope that that's been useful and it's brought to life, how we affect sort of finance change, not just in the front end, but really looking at the back end to start to serve our clients' customers better, and to really bring the digital journey all the way from the front through to the back end. Thank you very much. With this, I will hand over back to Jeremy.
Thanks, Atanas. So if you just stop sharing your screen, and I'll hop back to mine. So let me just make sure I'm sharing the right screen. Yeah, monitor 3, you see that?
Yeah, we can see that.
Great. Good. Well, thank you very much. And it really shows the power of, this low code, no code approach, using very similar syntax to you'd be using in Excel to write, formulas, and you can write very advanced things in that as well. So all under control of audit and control, and all IT type security. So yeah, very, very powerful. Good. So, a lot of this, sort of seems a little bit theoretical, but actually it is in practice. We've been working on architectures alongside some of the specific use cases, IFRS 17, IFRS 15, these type of accounting changes. But a number of the firms that we've been working with have definitely used accounting change to drive wider finance transformations. This particular case study is actually a finance transformation case study where we're working with 100% digital insurer. So this was this is a firm in India who had invested very heavily in the front office systems, had traditionally been in the life business, but was now opening up to a wider set of products, to a wider market, including insurance products around the gig economy. So these are sort of the daily or even hourly type insurance products. And when you get into daily or hourly type products, there's only one way that you can actually distribute those, and that's 100% digital. So they'd invested very heavily in their front office and customer facing systems, but the back office was very much in line with some of those, architectures that we were talking about earlier on in the presentation. So really, not equipped to deal with all this change at the front office. So we worked with this particular client over a period of around 9 months to implement a new finance architecture based on data lake technology, all in the cloud, coinciding with an Oracle implementation of Oracle Financials, so their new sort of Fusion cloud-based system. And by doing that, we've actually now turned their back office into a digital back office, able to run on a real-time basis, even to the extent where we can real-time post into the Oracle GL. Data's running over a message streaming bus called Kinesis, which is an Amazon technology, could be Kafka as well. And as Mark said, we're using this new data format, so moving away from sort of traditional fixed format files into the extensible file format called JSON, which means that we can bring in a lot of additional attribution for business intelligence, business reporting, all within the financially validated type environment. So really modern architecture, real time. We think it's the only real time finance architecture out there, posting into the Oracle Fusion, and very much sort of digital ready for new products coming on board, and also any new regulatory requirements, be it from an accounting or standards or any other regulatory or head office requirements that they need to meet. So, you know, it's out there, it's working, the technology's there, and as we say, it's not sort of, the approach isn't always, you know, big bang, change everything. We can do this in a very incremental perspective. Good. Okay, well, we're sort of coming to the end of the webinar now, but we got a few questions that have come online as we've been going through the slides and the presentation today. We've got time for a couple of them over the next couple of minutes. Mark, I'm going to pose this first one to you. Is, you know, isn't it more about, or could we achieve this in sort of wall-to-wall ERP transformation if we were to change everything from a finance perspective, which obviously is a big project in its own right, but would that solve the problems? So over to you, Mark.
Yeah, hi, sorry. I think an ERP would struggle, to be honest. I think there's a few reasons. One, obviously, some of the functional aspects we talked about in terms of calculation and ETL, they wouldn't really have those. I think the performance aspect for a lot of GLs wouldn't be up to the granularity of the data. But I think the most common one across most ERPs is just because they're so embedded in the organization, the change cycle is so long, they just can't react to the sort of dynamic nature of the business. And that's when you start proliferating mini sort of silos of finance process. So yeah, no, it's really the answer.
Okay, and I actually read an interesting survey quite recently where they were looking about finance transformation, and definitely from the audience that was surveyed by one of the big research analysts, there was little appetite for doing wholesale ERP transformation. I think it was something lower than 10% of the overall survey, but by far the main response was around building incremental, you know, processes built on top of ERP, much as we're talking about here. So a more sort of non-disruptive, let's leave ERP alone, but start to build more agility in using technology that sort of sits around that. And that's definitely the way that we see the market going. Final question, just in time available. We will respond to any other questions that you've put online with follow-ups. But this one is to you, Atanas, is you know, how advanced can you actually go in the expression language?
Thanks, Jeremy. That's a good question. And as we saw previously, the expression language that I showed in the demo is a low-code, no-code expression language, which means that, you know, we can use Excel-like formulas. Now, what we believe is that this meets most of the client needs today, and we are constantly working with our clients to build on and add and enhance the functionality and the usefulness, you know, the platform's input expression language. So the extensibility is vast, and we have a really good strong base to begin with.
Very good. Okay, well, thank you for that, Atanas and Mark. And We'll just finish up now by thanking everyone for attending online and also viewing the recording. If you would like any follow-up information, we have a lot of assets and collateral available in our resource center, legerityfinancials.com. So please visit that on various different topics. Today was very much about finance systems architectures, but we are also running a series of webinars specifically on the use case around ESG and accounting for sustainability and the role of finance within ESG reporting. So again, all based on the same platform, just a slightly different use case. And please visit our resource center for more additional information on that. But if you'd like a copy of the slides or a copy of the online recording, share with your colleagues, please send us a note to info@legerityfinancials.com. Good. Well, thank you very much for your time today. We hope you found the session informative and useful. We'll be following up with more webinars throughout the year and look forward to meeting you at a future session. But thanks for now.